Silver was going down, the silver price was going down, and the silver supplies were going down. But here is something that we haven't ever seen before, and that is a doubling of the silver supply with a more than doubling of the price. So this is the first time we are seeing silver stacks move up in the COMEX and the price also go vertical with it. First time we're seeing that. What does that mean? It means something new is happening here. What is happening? Well, the dollar is collapsing, and that's going to lead to silver becoming money once again, because once credit collapses, there's no other way to exchange other than with money itself, because everything else is a derivative. But where is the demand coming from? Is it the ETFs? Not really. Here is a close-up. We're going to go into the farther out, zoomed out chart in a second, so you'll see this isn't much of a climb. It is a climb. It's not much of a climb. But you can see here, the last 3 days, we've had these 3 bars over here. If you total this up, it's about 17 million ounces in 3 days have been drained from the ETF. 17 million ounces go out of the ETF, go back into the vaults, either in London or in New York. They're able to do this because there isn't that much retail demand for SLV or other ETFs.
In a mere 72 hours, 17 million ounces of silver were consumed. Not sold, not lost, but siphoned from the world's largest silver exchange-traded fund, ETF, SLV. Simultaneously, COMEX silver inventories have experienced a significant increase, nearly doubling since the beginning of 2024, while gold has recently surmounted $4,000 per ounce, establishing new records. This is an unprecedented state of affairs for the metals market. Rafi Faber, an analyst, believes that the current situation is the beginning of the end for the paper silver system. He asserts that silver is operating on only one of its 3 cylinders. Additionally, the price may reach the hundreds when the other 2 factors, retail layering and ETF demand, ignite. So what does this imply for investors? Additionally, how near are we to the breaking point? Let us analyze Rafi Faber's urgent warning and the most recent market signals to determine the state of a system that is on the brink of collapse.
At least in a dirty man's safe somewhere on your property, and don't tell anybody. Use code ENDGAME10 at checkout for 10% off. And if you want to buy your gold and silver at Miles Franklin, just mention the Endgame Investor at checkout and you can help support this channel. The first chart I wanted to share with you today is something that I'm covering at the Endgame Investor at Substack. And it shows how much of an idiot I am and how I'm so wrong and I don't know anything, because the daily repo volume is now over 100% of available reserves. There are about $2.966 trillion in reserves available, and there are over $3 trillion being traded in the repo markets right now every night. So that means that more dollars are being traded every night than actually exists to be traded. How is this possible? I don't know. The numbers are off. Could be that something else is happening that I don't really understand yet. But you know what? Gold is at 4,000. Silver is at 48.50. When you look this good, you don't need to know anything. But anyway, more about that on the Endgame Investor on Substack, and I will try to figure out the mystery here. But either way, this is not going to continue. I don't know how much longer it has, but if we go to the COMEX, what is going on with COMEX silver? This is the silver supply going back to 1971, looking for any kind of pattern that can explain what is going on with the silver supplies. You see here the spike since the beginning of 2024 from about 8,000 tons to now 16,543. The silver supplies in New York have basically doubled in 2 years. That's scary, and all this silver is going offline because a lot of it is going into cold storage, not for sale. There's some for sale. There is a good amount of silver for sale against contracts and the registered supplies, but a lot of it is ineligible, meaning it's not for sale. These are humongous whale stackers. We don't know exactly who they are, but they are piling up huge 5,000 ounce bars, and we don't know why. But if we look at these little rectangles, and I made them thin so you can see what exactly they are bracketing here. This is the 1980 run from the end of 1979 to the beginning of 1980. That is the big spike over here. What was happening in the silver supplies? They were kind of going up. They're going up appreciably, but nothing compared to what they are now. So there wasn't much of a move there because in 1971 or 1970, silver supplies were much higher than they were in 1979, 1980 in New York. So not that much of a correlation there. But here we see that as silver supplies were going up from about 1980 to 1993, you can see that the silver price was falling in a descending triangle from about the beginning here in 1983 to 1993. And around here is when, what's his name? Buffett, that guy, what's his name? Warren something. He stood for delivery of silver around here. And then the silver supply started draining, but there wasn't much move in the silver price. So we don't see much of a correlation between the silver price and the silver stacks in the COMEX vaults. Same thing in 2011, there wasn't much of a correlation at all. You can see here the move from 2010 to 2011 from it looks like about 12 to $15 or whatever it was to 50 in a matter of months. Not much movement in the silver supplies here. They went slightly down, but nothing alarming. And here is where we see what happened from 2020, from the lockdowns, those glorious medical miracles that saved all of our lives. Silver was going down, the silver price was going down, and the silver supplies were going down. But here is something that we haven't ever seen before, and that is a doubling of the silver supply with a more than doubling of the price. So this is the first time we are seeing silver stacks move up in the COMEX and the price also go vertical with it. First time we're seeing that. What does that mean? It means something new is happening here. What is happening? Well, the dollar is collapsing, and that's going to lead to silver becoming money once again, because once credit collapses, there's no other way to exchange other than with money itself, because everything else is a derivative. But where is the demand coming from? Is it the ETFs? Not really. Here is a close-up. We're going to go into the farther out, zoomed out chart in a second, so you'll see this isn't much of a climb. It is a climb. It's not much of a climb. But you can see here, the last 3 days, we've had these 3 bars over here. If you total this up, it's about 17 million ounces in 3 days have been drained from the ETF. 17 million ounces go out of the ETF, go back into the vaults, either in London or in New York. They're able to do this because there isn't that much retail demand for SLV or other ETFs. Otherwise, they would have to stack silver in the ETF to keep it in line with the silver price. The fact that this is going down means there is less demand for ETF for retail traders because they're just not interested in silver yet, because it's not going high enough fast enough, but it will. So no demand in ETFs, no demand in the physical markets for the stackers, because as I said, I just had an interview with Brian Kuzmar, who said the spreads are far apart, which means there is no activity and no demand. Here I wanted to go into silver squeeze, but we can see here the ETF demand. The only movement that ever increased ETF demand substantially was silver squeeze, excluding this part over here, which was the post-lockdown frenzy for silver. That really was a huge move in the silver stacks. This is the amount of silver in the SLV ETF. It went up from about the lockdowns to about the middle of 2020. I think that's August 2020. And then it stayed kind of steady until silver squeeze and then fell. So if we look back at the 2011, 2010, 2011 rally to 50, we can see here there was a little bit of ETF demand, not that much. It was slight, it was appreciable, but it wasn't humongous. It wasn't anything like this, right? So we can see here that even the 2011 rally did not have much of an effect on the ETF demand. It had a little bit, but not that much. The only thing that had a big effect on ETF demand was silver squeeze. That was it. And here is the move from silver from about 27 to now 48. So about a doubling in the silver price. And here is the move in SLV from, what is it, 400 and maybe 40 million ounces to now 487. So about 40, 45 million ounces. That's not that much. There hasn't been much demand in SLV. So once these 3 cylinders get going, meaning physical markets and ETF markets and whoever's stacking in New York, who appears to be continuing to do that, imagine where the silver price will be then. It will be in the hundreds, and that could be relatively soon, which is why I shared an options play on the Endgame Investor on Substack for paid subscribers. And if you sign up, all of the new paid subscribers will also get that idea that you can still execute, though there isn't that much time left.
Faber commences by asserting that silver is currently operating on one of 3 cylinders. The whale stackers, who are massive buyers in New York, are discreetly piling up 5,000-ounce bars, while retail traders remain distracted by tech and AI stocks. They are the only ones who are still firing. However, the data reveals the true narrative. COMEX's silver holdings have increased from 8,000 to over 16,500 tons since early 2024. A significant portion of that metal is classified as ineligible, indicating that it is not for sale and is currently in refrigerated storage. That is long-term accumulation, not speculation. Concurrently, silver is being lost by exchange-traded funds, ETFs, such as SLV. In a mere 3 days, 17 million ounces disappeared. Retail investors are refraining from disposing of their securities. They are merely not engaging. The AI and stock markets continue to be too alluring. However, the whales are discreetly reclaiming real assets from the system by converting paper silver into physical metal. These are the factors that render this moment historic. In every previous cycle, including 1980, 2011, and 2020, the price of silver decreased as the supply increased. This time, both are ascending simultaneously. It has never occurred previously. According to Faber, this inversion indicates a monetary fracture. The dollar is experiencing a decline. Global credit markets are in a state of tremor. The primordial function of silver as genuine money is gradually regaining its footing. To provide context, the total reserves available are now exceeded by repo market volumes and short-term dollar transactions. There are more dollars being transferred each night than there are available for trading. That is the extent to which the system has become overextended. Simultaneously, his argument is further bolstered by the explosive price of gold. The price of gold has surpassed $4,000 per ounce. Silver is on the brink of $49.50. Major financial institutions, including HSBC and the 50s, have recently increased their silver forecasts for 2025 and 2026. The wealthy are aware of the impending events. A transition from credit-based finance to concrete asset reality. Faber cautions that silver will exit the 40s and enter the triple digits when the other two cylinders, retail buying and ETF demand, ultimately rekindle. He even envisions a situation in which the purchasing power of silver becomes so strong that it could be used to purchase a home for less than 100 ounces, similar to the situation that occurred during the collapse of Weimar in Germany.
U.S. real estate. I wanted to go into this in terms of gold because we broke a low here in terms of how many ounces of gold it takes to buy a single house. We broke below 120 ounces. I think that is the low here in 2011. This is September 2011 when gold hit a bull market top over here, and then had a bear market over here. But now that is done. We hit like a triple, quadruple, whatever top here. Couldn't get through that resistance. And now we are below 120 ounces of gold per house. I expect this to go down to the 1980 level of that looks to be around 70. It's going to get lower than that in Weimar. Remember, it took about a $100 bill to buy a swanky house in Berlin. That's about 5 ounces of gold. I expect that we will go there for a time. It will not be sustainable and it will not be sustained, but for a time, you will be able to buy a nice sized house for about 5, 6, 7 ounces of silver. Exactly what it will be, it won't matter because the stackers will have a much more than that, and it won't even make a difference. What about silver? Well, that we haven't hit we haven't broken through the trend line yet, and we haven't hit resistance yet at about just below 5,000 ounces. Maybe that's 4,900, 4,800, something like that. But here is the trend line from 1980. We can see here we were about, what is that? Maybe 1,700 ounces, maybe 1,500 ounces in 1980. I don't know exactly what it is, but we have to break through 10,000 and get through this trend line, but we will, and we'll see this number fall faster than it will in gold, and we should break below the 1980 line here. If we do get to the Weimar area, then you should be able to buy a decent house for about 75 to 100 ounces of silver for a short period of time. At that time, you don't want to necessarily find the best deal. You just buy whatever is available because everybody needs silver because there's no other way to divide labor because credit doesn't work, which is why prices in silver will be so low at that time because of the desperation for real money with which to divide labor will be in desperation levels. UK real estate, just wanted to look at that. These are all from Gold Charts or Us. UK real estate is pushing 100 ounces of gold for a house. This is the average in all UK property price. I don't know how exactly accurate these are. These are estimations, but you can see here the trend is obvious. We're going to break through 100 ounces in the UK. One more chart, UK housing in silver. You can see we broke through 10,000 ounces. We're at 9,722. And we have a trend line. I didn't actually draw it here. I think we're right on that line from 1980. If you draw a trend line here, touching the 2011 high, and then touching here, I think we're right on that trend line, but it doesn't really matter. These things aren't exact. I also wanted to go into China real estate. Since we're talking about real estate, let's talk about China real estate. I haven't really covered this, but Phil Lowe of the Bitter Draft alerted me to this guy in China who was talking about Chinese real estate. It's really bad. I don't understand how you can have more repos trading every night than dollars that exist in the banking system, but whatever, I'll figure it out and I'll put it on the Endgame Investor on Substack when I do. In the meantime, gold's at 4,000 or very close to it. Silver should hit 50 any day now, and once it does, I think it's going to explode higher as we break through a 45-year resistance and we find a new level for silver that will be closer to the 30-to-1 ratio that we hit in 2011. I don't know how long it's going to take, but
This is not merely another market cycle. It is a change in the currency. Rafi Faber's message is unambiguous. Silver's subsequent actions will be motivated by necessity rather than bluster. Only genuine money will function when credit fails and dollars lose their significance, and silver will be the first to do so. Panic is not being sold by him. He is demonstrating the data's existing confirmation. The global financial system is flashing red, gold is breaking records, ETFs are draining, and whales are accumulating. So, contemplate the following. What occurs initially? $100 silver outburst or a dollar collapse that necessitates it. If you are a proponent of hard assets and accumulate physical silver and gold due to your comprehension of future events, please like, share, and subscribe to Macro Edge. We are monitoring each ounce, vault movement, and indicator of systemic duress to ensure that you are informed prior to the publication of the headlines. We should establish a community that not only endures the reset, but also takes ownership of it.